for almost 30 years, from the 1980s all the way up to 2013, when he was the chairman of the Prime Minister's Economic Advisory Council. Dr. C. Rangarajan, also former Reserve Bank Governor, joins us. Morning, Dr. Rangarajan. We have with us Adrian Mowat. He's the emerging market and Asia strategist, equity strategist
morning,
at JP Morgan. So over to you, Adrian.
Well, I think first of all, let's talk about an inflation targeting framework. Would you have welcomed this when you were the governor of the RBI?
Yes, I think I have always held that the dominant objective of monetary policy is control of inflation, and therefore I had favored the idea of ensuring price stability as the key objective of monetary policy. We had not at that time adopted inflation targeting as a specific framework, but we worked towards it. We worked towards the idea that the dominant objective and therefore the course of action that the central bank of the country must pursue should be towards price stability.
So we now have an environment where there's a big divergence in inflation, a positive CPI number, nearly a year of WPI deflation, and so the level of real rates seem to vary quite dramatically across the economy. What do you think the Reserve Bank should focus on? The real rates for the industrial sector that might be more influenced by WPI, or the real rates for the household, which would be a CPI function? Well,
for a long time we used to look at what is happening to the WPI inflation, because those were the numbers which were available with a short time lag. But over a period of time, particularly the last few years, the CPI inflation numbers have also started coming in with more or less the same time lag as the WPI. Therefore, the choice between the two now rests on which is a better indicator. For some reasons or for some purposes, WPI is a good indicator. But by and large, since price stability as an objective of monetary policy essentially means stability of prices from the point of view of the larger society, the consumer price inflation index is the key as far as monetary policy is concerned. But at the same time, the monetary authority should not ignore what is happening to the WPI inflation. After all, even in inflation targeting, there is a certain margin that is given to the monetary authority, and therefore in using that margin or in using the discretion, the monetary authority should look at the WPI inflation also. But I would say, given the fact that the CPI inflation numbers are now available with the same frequency and with the same time lag as the WPI inflation, the policy should be largely guided by what is happening to the CPI inflation.
Okay, well, Dr. Rangarajan,
as far as the real rate of interest is concerned, let me say...
Please go ahead, sir.
Yeah, yes. Yeah. Lata?
No, go ahead, sir.
No, as far as the real rate of interest is concerned, theory does not really specify about the policy rate of the central bank. Theory only explains the real rate of interest in terms of the real rate of interest either to the saver or to the investor. The policy rate is something which is very different. I would therefore say that the real rate of interest is something that as far as the policy rate is concerned, is something lower than the real rate of interest for the savers.
Well, Dr. Rangarajan, I just wanted to ask you, how do you see the monetary policy steps in the next 2 or 3 quarters? We don't have any forecast on WPI from the Reserve Bank, but they do give us a CPI forecast, and they see it rising to about 5.5% to 6% in the first quarter next year, and then going down to under 5% in the first quarter of 2017. Given this trajectory, would you expect that there is a lot of elbow room to cut?
Well, obviously, the latest policy announcement made a deeper cut than was expected even by the market. Therefore, in that sense, the cut in the policy rate is front-loaded. That's a good thing. Yes, I think the indications are that the CPI inflation will start rising because the fact that the monsoon has not been that good. We could expect some little rise in the food, in the overall food inflation, not necessarily the cereals, but pulses, vegetables, and so on. Therefore, taking into account the base effect and so on, there will be a slight move up as far as the price level is concerned. But we need to watch it. But if it happens that the CPI inflation happens to be below somewhat the expectation, then we could have another cut in the policy rate. But otherwise, I don't see any immediate prospect of a cut in the policy rate.
So if we could go back to sort of long-term projections for inflation, do you think India's will be successful in bringing down its long-term structural CPI with some of the policy initiatives we've seen, particularly in the agricultural sector?
Well, I do not know whether we would be able to bring it down below 4%. I think 4%, of course, is high as compared to many other countries, and we need to bring it down. But we do have a lot of structural rigidities in the system. I think it is going to be very difficult to bring it below 4% in a very sustained way. Our desire would be to bring it down, but I do think that we would be very successful or we will be treated as being successful if we keep the inflation rate at about 4%.
You think that is possible?
I think it is possible. That, I think, is reasonable. But the idea of going to 2% or something like that, I do not think that in a sustained way it may be possible. Therefore, we should be modest in our expectations and I think pursue towards the goal of getting the inflation rate in a sustained way at 4%.
Okay, Dr. Rangarajan, just wanted to come in on one point here. You know, the biggest problem that we've had this year has been the global growth slowdown. And a lot of central bankers like the PBOC, the ECB, are all feeling the need to add more stimulus into their economies almost 6 years after the recovery started. Is that a sign of perhaps more trouble as far as growth is concerned? Do you expect more slowdown in the global economies?
Perhaps the global economy, taking all countries together, the growth rate could slow down, even though the performance in the United States could pick up, could be better, perhaps would be better. Therefore, there will be a global slowdown, but that does not necessarily mean that the Indian growth rate will have to slow down. I mean, we are interconnected. Global factors are important, but the growth rate of the Indian economy has not always been influenced only by the global factors. We have had our slide down, and therefore we are in the process of recovery, and therefore I would say that perhaps a growth rate of 7.5% immediately is a possibility, and we should try to maintain it at that level.
All right, Dr. Rangarajan, we'll have to leave it there. Thank you very much for joining us this morning with your thoughts on both inflation and growth. Well, we have to take a